Alrighty, folks. Welcome in to the live stream, the Sunday stock market analysis live stream. Sorry we're late today. Um, the mouse died, okay? And we can't look at the charts without the mouse. So we have 14% battery, which should get us through the episode. But if not, we'll just have to kind of talk through the chart without the mouse or something. I don't know. We'll figure it out. But I think we'll be good anyways. So, first things first, of course, we're just going to jump right in and look at the economic calendar, see what news we have going into this upcoming week. So, yeah, tomorrow, Monday, December 11th, pretty much nothing, just a bunch of bond auction things. But tomorrow, or excuse me, not tomorrow, Tuesday. Tuesday is the big main event, I would say, for the week. We have our CPI data release. So for those of you who don't know, that is our inflation numbers. So it's going to tell us, like how much inflation has gone up or down over this past, it's for the previous month. So right now we're in December, so it's going to tell us what inflation, the rate of inflation looked like in this past November. So that's coming out at 8:30 a.m. Eastern Time on Tuesday, and that is the big one to watch. Followed by that on Wednesday, we have PPI data coming out also at 8:30 a.m. Eastern Time, and that's basically inflation but on the producer side. So the people who are like making like all the industrial goods and stuff, how inflation is impacting them. That comes out at 8:30, and that's basically going to be kind of like a continuation like reaction. Like it's going to be easy for us to predict what those numbers are based off of what we get from CPI on Tuesday. So that one isn't as important, and it's also usually like not as highly anticipated since CPI always comes out first, and it's kind of like easy to kind of know like what's going to be coming when it comes to PPI. And then we also have the petroleum status report that comes out at 10:30 the same day on Wednesday, so an hour after the market opens. And then probably the second biggest amount of data we have coming out is the FOMC announcement. So Fed Chair Jerome Powell, will be speaking at 2 p.m. Eastern, or excuse me, 2:30 p.m. Eastern, but the actual like decision about the rates is going to come out 30 minutes before that at 11 p.m. Or not 11 p.m., 2 p.m. Eastern, 11 a.m. my time. Shout out to the West Coast. And then Thursday, we have jobless claims at 8:30 a.m. That's probably the biggest one. Also retail sales at the same time. So two large pieces of data coming out at 8:30 a.m. on Thursday morning. And yeah, that's pretty much the only big thing we have that. And then Friday, we have industrial production numbers that comes out at 9:15 a.m. So 15 minutes before the market opens. So it's a pretty busy week. Which means that you definitely, if not out of all of the previous weeks of us doing this analysis, this week specifically, you need to have a plan. You do not want to be out here trading in the middle of trades when there's data that's going to be coming out that can totally shift the sentiment of the market, and you get spooked because you didn't know that it was coming. So make sure to keep an eye on this calendar. You can get this calendar at econoday.com, spelled like this. Oops, econoday. There you go, spelled like this. Econoday.com is where you can find it. It's super helpful and it's easy to read. It tells you all the data points, what to expect if you click on the consensus thing. All the things in the red dots are the important things. And then everything else is just kind of like little that honestly you don't really have to pay attention to. So now that we got that out of the way, let's go ahead and make our way into the charts. So here we are on the S&P 500 futures chart as always. And the first thing to note is that the contracts for futures have like rolled over. And so me personally, I'm going to be trading the December contract still going into this current week. So if you're on Thinkorswim, you can get to the December contracts by doing /ES and then the December contract, which is Z23, as you can see over here. Because if you just do regular ES, if we take a look at it real quick, you will see that we have a major gap on the ES chart. So the previous contracts, they're trading at like a 50-point premium as opposed to the December contracts. And I don't want to have to deal with the gap, and I'm just not ready to like roll over yet. So I'm still going to be trading the December contracts. So if you're trying to follow with like my analysis and stuff, you do need to be trading the December contracts. So in Thinkorswim, that's going to be /ES Z23. And then on TradingView, I'm pretty sure it's the exact same thing. I think you just don't have the /. I'm pretty sure that's how it works. I don't use TradingView, but if you just type in the box like on TradingView, it should like auto-populate and you'll be able to choose the December contracts anyways. So now that we got all of that out of the way, let's go ahead and go back to the contracts we're actually going to be looking at, which are the December ones. And let's get into this analysis. So first things first, we always like to look at our weekly chart so we can get a big picture of what's been going on directionally. And as you can see here, we've just been on a tear ever since these lows down here, right? We've just been going straight up, aside from these past 2 weeks, right? Specifically, last week was a very kind of like interesting week. And as you can see, if we zoom in here, we pretty much formed a doji candle on our weekly chart here, right? We had this huge lower wick down here showcasing that bulls did not agree with these lower prices, right? They stepped in and they were able to push price right back up above the 4,600 key psychological level, which is very important going into this week where we have all of this economic data, right? Bulls are clearly in control. They're defending on pullbacks. We see this huge rally that we've already got in the past 1, 2, 3, 4, 5, 6 now weeks in a row, right? So it's very clear who is in control right now. So in terms of us kind of being able to get a gauge of where we could potentially be heading next, if we zoom in on the week a little bit more, zoom in on the weekly chart, we can see here, like I've been saying in a lot of the episodes already, our best setups are going to come from that weekly formation, like on the candle that we've talked about, right? So the previous week, we want our current week that we're in, which right now is this little baby candle right here that you can't really even see because the week just started, it's very small. But ultimately, we want the current candle that we're on, so the one that's circled, we want this candle to look either one of two ways. We want it to look something like this, right? Where the body is just kind of extended far beyond the previous week's candle. Or on the flip side, we want it to look like this, where the body far exceeds the previous candle's body, the previous candle body to the downside, right? Those are going to be the moves that will give us the cleanest action and the best setups, right? In terms of like getting continuation and not like a bunch of chop and fake outs. So that's what we want this weekly candle ultimately to look like. But me personally, I am leaning more so towards the side of us being bullish, right? Like I said, bulls are clearly in control. We've had this huge rally to the upside in the previous weeks, and we have a lot of economic news coming out that will serve as a catalyst for us to make a move to the 2023 highs for this year, right? Those 2023 highs are over here. And at this moment, we are less than 100 points away, right? So all it takes is some good news from those inflation reports or from the FOMC decision or anything along those lines to catapult us up here to breaching all-time highs, right? So that is very important to keep on your radar going into this week. So with all of that being said, let's go ahead and let's zoom down into the setups that we're actually looking for. So here we are on the 4-hour chart. And right now, pretty much this whole area right here represents the past like 2 weeks or so, right? I don't know about you guys, but this looks pretty indecisive to me, right? We're clearly trading in a range, and this range, for the most part, is about 50 points from this 4600/4607 key level down to this 4550 to like 4530-ish area down here, right? This area down here. We've pretty much just been trading in between this area for the past couple of weeks. So right now, the market is pretty much kind of balanced. It hasn't really decided whether it wants to continue up or whether we want to pull back or not. And that makes sense, right? Because we're coming into a week of a lot of economic data, right? So nobody really wants to have their money being exposed when it comes to trades or just investments in general. Nobody wants to, be super risk on when we have all of this data waiting on us this upcoming week, which is a big reason why we're most likely going to get a large move either to the upside or downside, like I was saying. Again, in my opinion, I believe we're going to make a move to the upside because the sentiment has been so bullish recently. And on top of that, inflation can only go up for so long. Like, every single month, inflation isn't continuously going up. We had those huge catalysts from like obviously the pandemic and then supply chain issues and like war, like all of that is in the rear view. So like every single month after this, it's going to start leveling itself out. So all it's going to take is for inflation numbers to come in line or slightly below, and the market's just going to keep continuing up. And the fact that we were able to consolidate up here pretty much near the 2023 highs for the past 2 weeks, that shows the resilience of the stock market in general, right? So in terms of what setups I am watching for, as if it wasn't obvious already, right? If you remember our rules when it comes to like trading while the market is in balanced conditions like this, right? Go ahead and say it with me. We want to fade the extremes, right? We want to fade the extremes. So if price wants to, for whatever reason, next week when we're trading, or this week when we're trading, if price makes its way down here to these extremes at any point, the first thing that I'm going to be looking for is for us to get long in this area and ride this back to the upside. Every single time over the past 2 weeks we come into this, we've ended up bouncing off of this. Once here, once here, once here, once here. You can count this too. We got pretty damn close here. And then here, like literally pretty much every single day, we pulled back into this 45-50 area and bounced. So doesn't it make sense that if we come back into this area again, we would be likely to bounce off of this area? Like, the market usually repeats itself until it doesn't. Like, obviously, I'm not just going to blindly buy when we're in here, but I'm going to be looking for those signs of buyers stepping in to defend this area. And if they do, I'm going to be getting long. It's just, you don't need to overcomplicate it. The market has clearly shown its hand technically on the chart for the past 2 weeks, and I'm just going to listen to it. The trend is your friend till the end. And right now, the trend is fading the extremes. So down here, if we get a pullback into this 45-50 area, I'm looking for longs. And of course, if we get something like this, right, where we have, let me clean this up a little bit. Okay. Let me just do this really quickly. All right, so highlighting this area once again, if we pull back into this area, the only way that I'll be looking for downside down here is if we do something like this, right? We pull back into this 45-30 area, and then we either A, start consolidating here, and then have a further move down, this is the first scenario, which is not my ideal scenario. The other scenario that I would like to see, let me use a different color. We'll use this, whatever this is, purple, I guess. The other scenario I would like to see is for us to continue down pretty much immediately, and then for us to get a relief bounce back into this 45.50 area for our next move lower down into this 44.34 demand level. And the thing about this 44.34 demand level is that there's not really much stopping us once we're below kind of this 45.10 area. Like all we have of this is this huge bullish candlestick here. But like I've kind of been talking about when it comes to like air pockets, right? There isn't too much volume. We just kind of pushed up very, very quickly here. So if we can get below this, we're going to end up falling very, very quickly into this demand zone. So this is pretty much the only way that I will be bearish. Let me clean this up one more time. This is the only way that I will be bearish in this zone, is if we can either consolidate and see weakness down here at 45.50, or we breach it hardcore, pull back into it on a relief bounce, and then continue down to the downside. Those are the only two scenarios I'm looking for when it comes to shorting anywhere inside this 45.50 to 45.35-ish area on the S&P, right? Cool. And again, with this week's catalyst, that is a possibility to look out for. If inflation does come out hot, or if the Federal Reserve does come out and they're overly hawkish, right, when it comes to the rates, we could see a violent move down into this demand zone down here, right? We have no idea what's going to happen. All we can do is point out our different scenarios and then be prepared for them accordingly. So that is what I am watching when it comes to the downside. Now, of course, the upside, right? In my opinion, the path of least resistance is to the upside. So setups that I'm watching to the upside is this. If we take a look, let's go to a higher time frame real quick so you guys can see this easier. Come on. There we go. As you can see here, this 46.07 area has kind of been a key level since pretty much the highs of this year, right? If we get our drawing out, as you can see here, we've had a test back here in, what was this? This past July, we had a test here which served as resistance. Once we got above it, we had a support level, and then we breached it, became resistance. We got pretty close up here for resistance, and then over here, more recently, we rejected off of this 46.07 level to the downside, and now we're currently trading at it. So what I would like to see is just further acceptance and continuation above this level, right? Preferably now that you guys kind of have context of where this level's from, let's go back down to a smaller time frame. Let's do a 2 hour. Yeah, what I would like to see, which we're kind of honestly forming right now, is I'd like to see us have acceptance above this level, right? I want to see market participants accepting higher prices in anticipation for a move to the upside. And that's pretty much what we're getting right now, right? Every single candlestick you can pretty much see here has a lower wick up above this like 4600 psychological level, along with this obviously 4607 key level that stems all the way back to July of this year, right? So as long as we have acceptance above this, which to me will look something like this, right? Us getting a nice aggressive move to the upside, a pull back into this level, seeing us sustain here on this pullback, right? And maybe, we might dip just a little bit below it, whatever. As long as bulls are remaining responsive in this general area, I will be looking to play longs to the upside. Now, the only thing about the upside move that's kind of tricky about this is if we zoom out once again, there we go. If we zoom out once again here and we kind of look over to the left, just like in this area, there isn't really too much like activity that's gone on, right? Because this was near the highs of this year, right? As price goes higher, people aren't really as interested in buying anymore. So there wasn't really too much volume really that was like transacted at these levels. And if you can even see here, if we zoom in, right, we had this massive downside move as well on this day, right? We were able to kind of recover some of these gains only for us to retest right here and then start moving back to the downside. So again, there's not really too much like activity on here in terms of like upside targets. So it's gonna kind of be a little bit tricky to maneuver. Like honestly, like just looking at this, right? This is the only activity that we really have up in this general area from this year. Really, all we have is like this area right here at like 46.35. Maybe this, yeah, this like gap here at 46.50. And then of course this little baby retest swing high at like 46.75. And then at that point, we're at 2023 highs. So there's not really too many areas of resistance to the upside, which I guess is a good and bad thing. It's a good thing as in like we do have room to run with very minimal, turbulence. But on the other hand, it's kind of hard because like you can't just choose kind of like reasonable targets anymore, right? Like our closest target, once we get above this level, I guess we can also, I don't know if you guys can see this. Let me zoom in just a little bit more for you. There we go. All right. We also have this little gap right here, I guess you could use, which is about at 46.25. 46.25. We do have this gap here. So I guess you could use that as like an upside target as well. But yeah, I'm not going to lie to you. Like looking at this in real time, it is going to be pretty tricky for us to find areas. Again, just kind of circling this. This lines up with like 46.50. And then we have this 46.70 retest swing high as well. So yeah, these are kind of like our upside targets that I'm looking for. So again, like this 46.25 area, this 46.50, 46.50 area, and then this 46.70 area. Those are pretty much the main places that I would be looking for like upside targets. And then obviously, of course, the actual highs of 2023, 46.85. Yeah, those would be the upside targets that I'm looking for. Obviously, I'm not somebody who trades news. So it's unlikely that I would be in a trade where we would hit all of these targets in one trade. So I'd be looking kind of like at these to be my upside targets just throughout the week, right? Like let's say on like a Tuesday, if we're trading above this 46.25 level here, then my next target on like that Tuesday would just be up here at this 46.50 area, if that makes sense, right? I don't expect me to be in a trade where we just go skyrocket at 70 points in one go. That's very unlikely. So yeah, these are the areas that I am looking for to the upside. We already covered our downside scenarios. We already covered the news. And I think truly that's about it. We're not going to go over the NASDAQ today because of what I said at the beginning of this video. I don't want the mouse to die on us, and I'm on here looking crazy. So I hope that the S&P setups made sense to everyone. Again, just be prepared for anything, right? We have economic data coming out that could completely change the sentiment of where the market heads. So we don't want just to be super, super biased, like, oh, the market's been bullish this entire time, so let's just get in calls, or like, let's get long. Like, it could very easily shift to us going back into bear mode this just as quickly as we shifted from bear mode to this more recent bullish action that we've been seeing for the past 6 weeks. So yeah, I'll leave you guys with this breakdown for the week. If you have any questions, shoot me a DM or leave a comment on this video. Good luck to those who are going to be trading any setups that we talked about today. I'll be in the Discord doing my analysis and recording my live videos, all that stuff throughout the week as always. And have a good rest of your Sunday night.